What kinds of timescales for charts are there? Both short-term and long-term timescales are used depending on the term of the investment. But the diligent investor who pays close attention to risk studies everything that's available to him that is essential if you want to thoroughly study the behavior of an asset on the market and determine its reaction to external factors. The shortest time frame is based on minutes. The scale can be 1, 5, 10, 15, or 30 minutes. Speculators use these graphs and are especially fond of the 15-minute time scale. For us, they are important only for determining the short-term movement of an ongoing long-term trend. There are also graphs that show pricing changes per hour, 4 hours, day, week, and month. These graphs are extremely important to us since they give us the sense of long-term trends. How do investors analyze graphs? The goal of every investor is to create the most accurate forecast of how an asset will behave over a fixed period of time. Possible investors use all of their knowledge and abilities to minimize risk, and so they study the behavior of an asset over various time intervals and in great detail. Now we've reached the stage when fundamental analysis and technical analysis should fuse together in practice. Do you remember the practical lesson in which we analyzed the behavior of gold over a period of 50 years? Now we will regularly do exercises like that in the preliminary stage of analysis. The investor constructs a graph for an asset that interests him or her. The graph should have an idea of the longest scale possible. From the statistician's point of view, the greater the time period in which one can observe the behavior of an asset, the more accurate the conclusions we can draw regarding the effect of various factors on its behavior. The investor then marks the main trends in the graph, noting both the ends of the trends as well as the periods of rapid development. The next stage involves collecting information on the asset. This is where fundamental analysis comes into play, as the investor now needs to understand the characteristics of the market. Historical facts and the events affecting the price of an asset must be evaluated. Since you have already studied fundamental analysis, you know what kind of events we're referring to: political intrigue, elections, revolutions, natural disasters, wars, catastrophes, and all types of economic news. And don't forget about the main economic indicators. By synchronizing events with the graph, the investor can define the degree to which this or that event influences the behavior of the asset. Finally, graphs with shorter time frames must be analyzed using the very same method. This is essential for determining short-term trends instead of just the overall trend.